Today, I'd like to have a special episode where I'm just going to briefly go through my very own opinion about technical analysis. If you look at the title of this video, you probably figure out what I'm about to say. In my opinion, I think technical analysis is totally useless in most cases, especially when it's used on a very complex product or a product that's being watched by a lot of participants. So this is actually kind of counterintuitive that the technical analysis will work very well for a small to medium cap stock, in my opinion. So, but um, for a stock, not a stock, for a product like the S&P E-mini or something that's like Apple stock or Amazon stock, technical analysis is very useless. I'm talking about maybe there's some advanced level technical analysis will work, but fundamental rudimentary technical analysis, the patterns, the trend lines are basically useless. So let me just give a few examples. For example, I'm here at 2019, 2018. The trend line looks very obvious when you're looking from hindsight. For example, you can draw a trend line here. You can see that obviously there's a trend. But if you are actually going through I really urge all the new traders to use the bar replay feature of your trading software and going back to the market and start trading bar by bar, because that's going to give you a very different perspective. When you can see the future, you can see the trend is very clear, but when you are actually there, it's actually very difficult to determine the future trend by just without knowing what's going to happen in the future. For example, I'll give you a very classic example of 2019, where we came down, right? We came down. We have a kind of fall off in the market, a mini crash compared to the crash we had, in March this year. So this crash looks kind of big, but it's actually very small compared to what we had in March, the coronavirus crash. So let's say I have a trend line here that's going down. Now it broke the trend line, and I think the stock's gonna go up. So this trend line obviously kind of worked. But if you are here, you actually can't draw this trend line until we reach this step. And when you're here, you actually don't know if this is actually a interim top, right? You have to really go forward. So there is no multiple touch on that trend line allows you to have a proper trade entry. So once you draw the trend line using this, now you know, once you get here, you know that this is a lower low. You draw the trend line here, but this trend line is practically useless because it just keeps going down, and we had a little touch here, so maybe some really skilled trader can enter using the trend line here. But for me, I think this trend line is practically useless from entry perspective, because by the time you enter here, you are kind of late to catching this move, because this move was so sharp and the bounce was so quick, and you probably can only capture a very small amount of profit unless you are smart enough to be lucky and pick a bottom here, right? So this trend line is not very valuable, as you can see. And when we get a bounce, if we start, like, if you're watching the market, now you start drawing a trend line here, because you can see that we made a higher low. So maybe we're going up right now. So I'm just going to change this color to green. Now let's take a blue color, because the green color is kind of hard to see here on this chart. And now you can see that I have a blue trend line here. Now the market keeps going up. Now it's touching that trend line, and it keeps going up again. So that's a nice touch. However, now the trend line gets violated. Am I supposed to sell here? You probably have to question yourself. Is this just breaking the trend line and maybe it's a downside for the downside coming up? Well, it turns out not really. The trend line gets broken, then the market keep going up. Now at this stage, you probably want to revise your trend line. You probably want to move your trend line over here. Maybe that is a trend. Then you keep going up. Now the trend line gets violated again, and it keeps going up again. Okay, now I have to revise my trend line again, and keeps going up again, violates again. Let me revise again. Maybe that's trend line, but now you can see that my almost no price is touching the line. So maybe this is not a trend line. Maybe this is a trend line. Is this a trend line? Using this pivot, and maybe that's a trend line. Okay, so that may be the trend line because now the market has violated the trend. Oh, guess not. The market's going up again. It has passed this peak, right? So we know the trend is up again. The trend is definitely up, so maybe that is a trend line. You can see that the S&P, the E-mini future, keeps violating your trend line. And that is not a coincidence, guys. The market maker, the big money, this is a difficult game. Let me just summarize for you. This is a difficult game. There are very, very smart people making, literally there are very smart, very, very smart traders or algorithms that's making this chart. And you can't possibly trade these charts using a simple tool like a trend line or data analytic tool like a straight line. It doesn't work like that. So it doesn't matter. So trend line and it just doesn't work. Okay. And also, what about Fibonacci? Everyone's talking about Fibonacci. I think Fibonacci is also pretty much useless. Every time the price hits a Fibonacci level, people saying, "Oh, it's gonna hit the 50% Fibonacci level." Every time I hear people talk about 50% Fibonacci level, I just think I'm speechless. Okay, I'm speechless because a 50% Fibonacci level is basically your price goes to 50% point. Okay, like it doesn't mean anything. It's a 50%. Like you don't need the Fibonacci or fancy words to describe that level. Of course, Fibonacci, the two very important level of Fibonacci would be 61, 8%, or 38.2% Fibonacci level. These are very important levels. However, excuse me, these are very important levels, and according to these Fibonacci guys. And as you can see on these charts, they don't really do anything. The price does not really interact with this level in general. For example, like when you are going on the way back, you can see that the Fibonacci can be drawn when we have a top and bottom, and this is supposed to be an indication what the future price is going to be, right? Future price is going to interact with. But you can see that this pullback, not a pullback, this is rally, like from the bottom here, it doesn't really stop or interact with these Fibonacci levels. It just zooms through them, basically. So you can't really trade based on these Fibonacci levels. I can literally draw the Fibonacci lines on any of the stuff. It's just totally useless to me. I just don't see any value. You can draw yourself. You can see that this basically has no value. Okay, sure, like I drew here the Fibonacci level, it interacted with this level, but you can't really place trades on it because the price violates these levels so much, right? The price goes above it and it goes below it quite a lot, so you can't really use this level to put your stops using these levels, right? Because if you are trading around the Fibonacci's and you put the stop, where are you going to put a stop? Like how much percentage of a stop are you going to put? Are you going to put it here? Are you going to put it here? Are you going to put it here? Because it's very easy to get stopped out. I think like when the price oscillates in certain areas, by just looking at Fibonacci, I think it's just pure coincidence. For example, the price just start oscillates around this half 50% level. I think that was just pure coincidence, in my opinion. It doesn't have too much value for me as a trader. And you can see that here, the price oscillates above and below. It doesn't matter. It doesn't really matter to me. Okay, now we can look at a much more important move that we had recently with some of the technical analysis tool like Fibonacci. You can see that we hit that 38% level. I think that's just by pure coincidence because or actually you don't even need Fibonacci to figure out that level, because in previously you can see that we have a price that's trying to break above it but went below, and we had a little attempt again. The point is, this Fibonacci sign lines does not give you the perfect spot to entry. The perfect spot to entry on these charts are here, obviously, and the second perfect spot would be here, right? You can see there's nothing indicating that you could possibly enter here. And even I put a Fibonacci line here. This is oscillating around the 61.8%, but there's a couple spikes down. When you're actually trading this, you don't know if this line is going to be violated, right? It doesn't really give you a clear direction, clear sign, clear resistance on how you can place your trades. Again, the trend lines doesn't really work here either, right? Imagine you were here, but this time you already missed a second perfect entry point if you're using the trend line, because if you're doing the trend line from the bottom, your trend line gets violated right there, right? And now the price basically took off without you, and you start drawing that trend line, hoping the price to touch the trend line again. Let's see what's going to happen. But then it violates the trend line, so you might have placed a long position here. It gets violated, you get stopped out, and now it just keeps going up and up, and maybe you want to use this as trend line at this point. Right? Maybe using this pivot, I don't know. It gets violated again. So your trend line just keeps getting violated all the time. If you believe this kind of stuff does work, I can tell you it doesn't. It's just useless. So this is the point of my video. Do not think that using a technical analysis or pattern recognition, head and shoulders, all these classic patterns can give you an edge when you're trading a complex product like a E-mini S&P futures. And hope this video save you guys a lot of money, save you guys a lot of time, and see you next time.